So hi guys, I have seen some comments asking me which confirmation that I use to place my trades. And in this video, I want to show you one of the simple confirmation entries, confirmation candlestick that I use to place my trade. So in this video, we'll be talking about the morning and the evening star candlestick. Now, the essence of candlestick confirmation is to, validate your trades. So take for example that your trade is in your POI. Your trade is in your POI. You need to see something to validate that this trade is likely to play out. That's the essence of confirmation entries. So if your trade is in an uptrend and probably you want to sell, you need to see something that is telling you that this trade is about to reverse and then go for the sell, and then vice versa and all that. So if your trade is in the downtrend and you want to buy, you need to see something defined that will tell you that this trade is most likely going to buy. That's the essence of confirmation entries. Now for context, candlestick is one of the most important aspects in technical analysis. So the candlestick gives a broad description of the price charts, although price charts can also be represented by bar charts and all that, but the candlestick is more beginner friendly and is more easier to navigate and to trade. Okay, so a candlestick chart helps traders understand, price movement, helps to spot possible reversal points, possible continuations, and all that. So if I'm selling, is a candlestick that can tell me that this trade is reversing. If I am selling and this trade is not likely to reverse, is the candlestick that I see there that will tell me that this trade is in a continuation and I should not go for the sell. That's the essence of candlestick. And of course, we know that candlesticks are in two parts. We don't want to go into details of candlestick in this video, but candlestick are of two parts, the body and then the wicks. And then under the wicks, we have the upper wick and then the lower wick, okay? And of course, we know there are patterns to candlestick, the single candlestick pattern, which is made up of one candlestick in its formation. Example of the single candlestick pattern is the doji, the hammer, and all that. And then we have the double candlestick pattern. The double candlestick pattern is made up of two candlesticks in its formation, of which we have candlesticks like the tweezer top, the tweezer bottom, and all that. And then we have the triple candlestick pattern, which is made up of three candlesticks in its formation. Example, we have the morning star and the evening star, which we are going to be talking about today. Okay, so based on usage, candlestick can be categorized into three. I just needed to say this. Based on usage, candlestick can be categorized into three. We have the reversers, which are the reversal candlestick, which are mostly found at the end of a downtrend or at the end of an uptrend, which shows you that this trend is about to reverse. That's what they basically do, the reversals. An example is the morning star and the evening star. And the reversals are the candlesticks that we use mostly for our confirmation entries. So take, for example, that a trade was, reversing towards your POI. So take, for example, that you have, let's say you had your POI here, and then price had to, do this and then come down to your POI. You need to see a reversal here before you can go for the sell. So that's the use of the reversals. They are mostly found at the end of either an uptrend or a downtrend. So they signal possible reversals in the market. And we also have the continuation candlestick, which is, telling you that this trend is in a continuation. So they are not used for confirmation entries, but they tell you that this trade might not open. This trade might not, sell, or this trade might not sell. This trade will not reverse. So this trade is likely to continue. And also we have the indecision candlestick. The indecision candlestick, like the name implies, tells you that there is indecision in the market. So there's signals that there's a contention between the buyers and the sellers. So indecision candlestick generally bring the market to a pause. Okay, they show that market is in a pause. There's a contention between the buyers and the sellers. For price to move up, for price to be bullish, there has to be buyers, and then for price to be bearish, there has to be lots of sellers. So when there's a contention between the buyers and the seller, the market is in a pause. Okay, so anywhere you see an indecision candle, it shows you that the market is in a pause. And an example of indecision candlestick includes we have the doji, we have the spinning top. Okay, so let's talk a little about the doji. So, like I said, let me remove this here. Okay. So, like I said, the doji is an example of indecision candlestick, which signals that the market is in a pause and has no clear direction. Okay. The doji tells you that there's a contention between the buyers and the sellers, and it's bringing the market to a pause. Now, how do we know a doji in the chart? So, a doji candlestick are usually, signified by tiny body, little or no body, and then long wicks. Long wicks. So if you see any candlestick with a very tiny body and then long wicks like this, just know that this is a dodgy candlestick. A dodgy. Okay. A dodgy. They are usually with little or almost no body and then long wicks. Okay, so anywhere you say dodgy candlestick is telling you that the market is in the pause and then there is no credit direction just yet. So you wait for the next candlestick to print before making your decision. And another example of the indecision candlestick is the spinning top. Now, the spinning top and the doji are almost the same thing, but for the spinning top, they have a little bigger body than the doji. So their body is a little bit of a bigger body. They have bigger bodies than the doji. So if you see a candlestick that has long wicks on both ends, but the body is kind of bigger than the doji, that is a spinning top. So of course they do same thing. They tells you that the market is in a pause, and then you wait for the next candlestick to print before you make your trading decisions. Okay, so now let's go back to the reversal candlestick, which is the core of our discussion for today. So like I said, the reversal candlestick are mostly found at the end of an uptrend or probably at the end of a downtrend. So let's take something like this. So let's say here is your POI. So they are mostly found here, and the signals that this trend is likely to reverse and then start going upwards. Okay, that's the essence of reversals. Now, the morning star and the evening star candlestick. So the morning star candlestick is a bullish reversal candlesticks. Okay, is a bullish reversal candlestick that occurs at the end of a downtrend. The morning star is a bullish reversal candlestick that occurs at the end of a downtrend, and it signals possible reversals from a downtrend to an uptrend. So if you have, let's say, your POI is somewhere here, and then you want to buy the market. You want to buy the market. So take, for example, you want price to come here, and then when price comes here, you wait for the morning star, and when the money start finish printing, you have to go for a buy. So they are mostly found at the end of what a downtrend, and the signals that each trend is about to reverse into an uptrend. Okay, so how do we know a doji candlestick? Now, a doji candlestick is a three candlestick pattern, a triple candlestick pattern, which means it has three candlesticks in its formation. So the first candlestick is a bearish candle. So you can see something like this. Something like this. Now, for you to know a bearish candle is not by the color. Okay, for you to know a bearish candle, the open, or sorry, rather the close of the candle has to be below the open. So if this candlestick, if here is the open of the candle, and then here is the close, it shows that this is what a bearish candlestick. And then if the close is above the open, tells you that that is what a bullish candlestick. So I just needed to say that. So in the formation of the morning star, the first candlestick is a bearish candlestick. A bearish candlestick. And then the second candlestick is an indecision candlestick, either the doji or the spinning top. So you can see maybe something like this with long wicks. Long wicks like this. And then the third candlestick is a bullish candlestick that must close above this doji. Take note. It must close above this doji. Okay, of course, for you to know a bullish candlestick, the close must be above the open, not just by the colors. The close must be above the open. So a morning star candlestick in this formation has first a strong bearish candlestick and then an indecision candlestick, either the doji or the spinning top, but the doji works better. So take note of that. And then the third candlestick is a very strong bullish candlestick that has to close above this. So if this candlestick is here, it's not valid. It has to close above this middle candlestick. Okay, so this bearish candlestick is telling you that sellers were in control of the market before, and then the indecision candlestick is telling you that there was a pause in the market, and then this bullish candlestick is telling you that buyers took over the market. So your entry will be here. If you want to go long, your entry will be here, then your stop loss will be determined by your strategy, and then, take profits will be determined by your strategy. But at the close of this third candle is when you enter the market. Okay, so you can use the Morningstar candlestick to buy a market. So if I give any setup, probably you are supposed to go long in the market, you can use the Morningstar candlestick to go long in that market. Okay, you can use the Morningstar candlestick to go long in that market. Now let's talk about the evening star. The evening star candlestick is the opposite of the Morningstar candlestick. It's the same thing, but it's the opposite of the Morningstar candlestick. It's still a three-candlestick pattern, which means first, a strong bullish candle, second, an indecision candle, third, a strong bearish. Now, let's define it. The evening star candlestick is a bearish reversal pattern. Remember, the morning star is a bullish reversal candlestick. So the evening star is a bearish reversal candlestick, and it occurs at the end of an uptrend. So take, for example, let me do this analogy with my strategy. So let's say I saw a sweep here, a break of structure, my structural point and all that, and I was waiting for price to probably come here, and then I have my execution. I need to wait for what? The evening star candlestick here, and then go for the sell. So the evening star candlestick is a what? A bearish reversal candlestick, and it occurs at the end of what? An uptrend. This move that played out before tapping your POI is an uptrend. That's what I'm trying to say. A bullish move. It occurs at the end of a bullish move, and then when it gets here, it tells you that the market's about to reverse and then go for a sell. That's why we use it for confirmations. So it's a bearish reversal candlestick that occurs at the end of an uptrend or a bullish move, and then signals that price is about to reverse. Okay, like I said, the structure is a strong bullish candlestick now. Okay, and then the middle candlestick is an indecision candle. Like I said, either the spinning top or the doji, or we'll do chart examples. And then the third candle has to be a bearish candlestick. Remember, I said it's not by the colors, but the close has to be below the open for you to know that this is a bearish candlestick. So your entry, like I said, would be at the close of this third candle. Stop loss, your strategy will tell you that, and then you'll take profits at where your strategy is telling you. Okay, so you can use the morning star and the evening star for a valid confirmation. They work perfectly well. I've been using them for quite a number of trades, and they work very, very well. Okay, let's see if we can see some chart examples of the morning star and the evening star. Good, we don't need to look for them. So this is an evening star. Okay, it occurs at the end of what's an uptrend, a bullish move, and it signals possible reversal. So you can see that after this bullish move and then this, candlestick here, this indecision candlestick, and then this third candle. Remember, the chart is not an illustration, so it might not be perfect as the way I illustrated it, but if you can practice it well, practice it very well, you'll get familiar with how it forms in the chart, right? So we have this as well as our evening star, and then we have this as a very, very good morning star. Very, very good three candlestick formation. You can see this long bearish candle, this indecision candlestick at this middle, and then this bullish candlestick. Okay, they work very, very well. They work very, very well. You just need to, pay attention to them. Try to backtest your charts and then practice them before you try using them. Okay. So this is also another one, a bullish candlestick, an indecision candlestick, and then a bearish candlestick. So this is the evening star. Right? They are all over the chart. You just need to try to spot them. This is also another one. Yeah, everyone on the charts. You just need to try to spot them and then, start using them. So this is another one. This is also another one. This first candle is the spinning top, and then this other one is the doji. So this is a very strong one. Okay. A combination of both the spinning top and the doji. And then the third candle has to close below this doji. Like I said, a chart is not an illustration, so it might not present itself as you're seeing it in illustration. That's why you need to backtest so that you can see how it, presents itself in a real chart. So this is also another one. This is also another one. So just go over to your charts, try to practice them, try to spot them before you use them in a real market scenario, right? Try to practice, and then you get it. The morning star, the evening star, they are just a three candlestick formation. For the morning star, it has to be a bearish candle, an indecision candle at the middle, and then a bullish candlestick. And then for the evening star, a bearish candle, an indecision candle, and then, sorry, a bullish candle, yes, an indecision candle, and then a bearish candle. Okay, so the bullish candle tells you that what? The bullish candle tells you that buyers were in control of the market, and then we had a pause, which is the indecision candle, and then the sellers took over the market, so we enter for the sell. It's very simple. So if I see my strategy, a sweep, either a buy side liquidity sweep or a sell side liquidity sweep, and then a break of structure, a structural points, and all that. I don't need to start going back to my strategy. There are lots of video about my strategy on this YouTube, so you can check it out, or X or TikTok. Anyway, you see this video, there are lots of my strategy on my page, so you can check it out. So if I'm waiting for a confirmation here, I'm waiting for what? The evening star. So I need to see a bullish candle, an indecision candle like this, an indecision candle like this, and then a bearish candlestick that must close below this. Okay, it must close below this, and then my entry will be at the close of this third candle. My stop loss for my strategy is usually above my zone, and then my take profit is where price start retracing from before taking out my structural points. So I can have something like this, but the candlestick can form somewhere here and all that. Okay, so look out for this. Practice using the morning star and evening star. If I invert this, I have it for the morning star. So I'm waiting for price to come back here, give me this candlestick formation, and then I enter at the close of this third candlestick. And then I'm good. So look out for candlestick formations like this. Practice them. Go back to your charts. Try to spot them. and then try to master them before you use them in real market scenario. So this is one of the simple candlestick confirmation that I use to place my trade. It's very simple to understand. It's just a three candlestick formation that occurs either at the end of an uptrend or the end of a downtrend, and then the signal possible reversals. It's as simple as that. So practice it, backtest it, and then try to use it. And if you use it and it works for you, leave a comment under this video so that others can learn as well. Okay, so see you guys in another video. Safe guys.